What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday. The weekend is here. It's almost time to party. But before we do that, we're going to watch the FANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns of the week from all the major FANG stocks. We got major news from Amazon and Tesla this week, but we're going to start things off like we always do with Meta Platform. Started the week at 155, rocketed up over 7% to $166 per share. This is on the heels of the company securing a $10 billion bond offering with a 40-year term and paying just 1.65 percentage points above treasuries. This offering was oversubscribed to the tune of $30 billion worth of orders. So Meta could probably go back to this market if they need to and get more money. They're saying that they're going to use this money, that's Meta, use the $10 billion potentially for capital expenditures, stock buybacks, potentially acquisitions, and other investments. Me personally, just knowing what we understand about Meta, the fact that they have really strong cash flow still, strong earnings, and despite the investment into Oculus and kind of the metaverse, they still have plenty of earnings. So I think this company is either trying to accelerate a stock buyback as the stock has obviously come back big time, or they have an acquisition target that they want to have lined up. You might as well lock in the money now as interest rates are projected to continue to go up for the next couple of months. Lock that in now, and then if you do need to go back to the bond market, you potentially could do that at a later date. Now, complicating the acquisition story is that pesky FTC, as Meta is putting on hold its within acquisition amid that FTC lawsuit that we talked about a week ago. Now, the Federal Trade Commission, the staff of the FTC said, hey, we can't block a $400 million startup app maker from being acquired by Meta, but the leadership over at the FTC said, no, we probably can. Now, so what Meta decided to do this week is they say, hey, we won't close this acquisition until January 1st, or the court rules an injunction blocking the deal, whichever comes first, basically giving both sides to maybe do a little negotiating and figuring out if the FTC really wants to go down the rabbit hole of blocking a $400 million acquisition from a company worth $450 billion and spending that money on a non-core project over at the company. We'll see what the FTC decides to do. Now, Instagram's head is moving to London. This goes along with the fact that you also have Meta's global affairs president moving to London as well. I don't know if this says more about London or the state of affairs out here in California where these guys were originally based, but this also appears to be a decision by Mark Zuckerberg to experiment running the company in multiple geographic locations. And not only that, developers and staff in London costs a fraction of what it costs to hire those people here in California. So it could be based on cost, but these executives just could generally want to live in London, and Mark Zuckerberg letting that happen. Now, moving on to Apple. Start of the week a little bit lower at 162, end of the week about 1.7% higher to 165, holding that level at 165. We'll see that when we get to the technical segment of the show. Now, Apple, just like Meta, heading to the bond market as well, as these companies' CFOs probably properly reading that interest rates going to continue to tick up. Now, Apple got similar terms, slightly better, as they got also a 40-year debt offering with just 150 basis points over United States Treasury rate. Anybody wants to loan me money at that rate, come knock on my door. Apple going to use this money for dividends and buybacks, which has essentially been the MO of the company over a long period of time. Now, Apple is asking their suppliers in Taiwan with shipments that are heading to China to actually relabel those to either Taiwan, China, or Chinese Taipei. This obviously comes on the heels as Speaker of the House Nancy Pelosi headed to Taiwan this week, ratcheting up some tensions between the three countries, including the United States. Moving on to Amazon, start of the week at 134, end of the week over 4.5% higher to $140 per share. We've got another acquisition over at Amazon. This time it's robot maker iRobot, which makes popular mops and robotic vacuums that roll around on your floor and do all the work for you. Now, iRobot was actually a public company, and the deal is for just $1.7 billion in an all-cash deal. Now, considering iRobot is a public company, we can look at some of the forward earnings estimates that Wall Street had. I had on tap about $1.65 billion worth of revenue this year, about $1.78 billion worth of revenue next year for iRobot, and then into 2024, Wall Street was expecting close to $1.9 billion worth of sales. So right off the bat, you can see that Amazon paying just one-time sales, excluding the premium that they had to pay for iRobot to get the board of directors to approve this deal. Now, I want to show you iRobot's most recent financial results, and you're going to see why this makes so much sense for Amazon to pull this off. First of all, Amazon, as you'd expect, iRobot probably a big seller on Amazon. That means Amazon knows exactly how many sales iRobot gets on the Amazon platform. What Amazon also knows and gives it a real competitive advantage in this type of deal is they know how much iRobot spends on advertising on Amazon. And I'll show you why that's critical here in a second. So the company through 6 months had $547 million. So obviously in the third and especially the fourth quarter, this company really accelerates sales. I would assume on this cost of revenue side, off of $547 million worth of revenue, the company had $357 million worth of cost. When you're Amazon and you're contacting suppliers, my guess is they'll get better terms and better rates than iRobot did on their own. Off of $188 million worth of gross profit, this company generated $137 million worth of sales and marketing spend, likely a lot of pay-per-click and online ads over at iRobot to drive these sales. In fact, marketing and advertising, the biggest line item expense that iRobot recognizes. And who do you think iRobot probably spends a fortune on advertising? That is Amazon, to get their products to the top, to get people clicking on those, to give incentives for people to buy those on Amazon. They probably pay a lot of this $137 million directly to Amazon. So you bet you Amazon's going to be able to cut that marketing budget in half at least. They'll probably be able to drive down $53 million just in G&A costs. They'll be able to eliminate a lot of that. And then you have R&D expenses as well. You'll have Amazon's expertise likely drive down those costs. So over the last 6 months, this company had $275 million worth of operating expenses. So off $188 million in gross profit, we minus off $275, and you see this company lost $87 million on its own over the last 6 months. We have to believe Amazon is going to be able to find at least $87 million worth of synergies. My guess is you'll find that just in the marketing spend. So Amazon getting this company for just one-time sales and probably almost immediately turning it from an operating loss company to an operating profit, given the fact that they can cut this advertising spend and they can find synergies among R&D, general administrative, and probably cost of goods. Great acquisition, in my opinion, from Amazon. Not one that is super tangible to the bottom line or even the top line over at Amazon, but whenever you can make an acquisition like this for this good of a price, I think you do it every day of the week over at Amazon. Now, they're also taking steps ahead for massive warehouse projects, both in New York and California, probably the two critical markets for Amazon here in the United States. Again, this is despite some rumors that we've seen and the revenue slowdown we certainly experienced over at Amazon as well. This could be Amazon telling you that, hey, we're seeing demand start to pick back up, or maybe it didn't contract as much as Amazon or analysts projected that it might. And so going forward with these large and expensive warehouse projects could be a bullish sign for Amazon. Now, moving on to Netflix, start of the week at $221, just holding out up at that upper level. End of the week, 2% higher to $226 per share. Not a ton of news out of Netflix this week. Moving on to Nvidia, start of the week at $181. This one also going higher, up over 4.8% to $189 per share. Also, not a ton of news out of Nvidia. We wait their earnings in about a couple of weeks here on the channel. Now, moving on to Google, start of the week at 114, also higher. Everything's just melting up. This stock ended the week close to $117 per share. This is after Europe is probing that Google Play Store for antitrust. This all relates to the high, nearly 30% developer fees that Google and Apple charge on their App Store for every transaction. My guess is over the next, I would say maybe 24 months, I think those 30% app tax probably out the window. You just have too much smoke here. I think eventually they'll get eliminated. Whether or not that's priced into Google or Apple stock might not to the fullest degree. Moving on to Microsoft, start of the week at 278. Like all these stocks, just melting up higher to 282. This is on the heels of Activision Blizzard, which, as we know, is awaiting for that deal to be approved by the FTC here in the United States to allow Microsoft to absorb this company that had $1.64 billion worth of revenue in the most recent quarter. That beat expectations by about 70 million, and they're doing it from a non-GAAP profit of 48 cents per share. We'll see if that deal is approved anytime soon. Moving on to Tesla, the only stock I believe that ended the week down, started the week at 920. Momentum just could not stay in this name, down about 6% to 864. This is on the heels of that cyber rodeo yesterday, and I've got some summaries here. Elon Musk said, if you see people panicking about Tesla stock, instead of saying my stock is down, that's a buying opportunity. I couldn't have said it any better myself. Whenever Tesla is going down, people get in my comments and start panicking, and I'm thinking to myself, guys, this is exactly what you dream of. Unless you're trying to sell your Tesla stock tomorrow or next week or next month, you actually want it to continue to go down, and at best, you want it to go sideways. It's when you're 50, 60, 70 years old, that's when you want it to peak out in valuation, or whenever you're trying to sell your Tesla stock, that's when you want it to peak in valuation. Nothing does anybody any good when a stock goes up and you don't sell it. If it makes you feel good, that's great, but understand that you actually should be more excited when the stock actually goes down in price. If we do all these things correctly, that is referring to robo-taxis, the Tesla bot, and other things, Tesla will be probably the most valuable company on earth. Elon cheerleading his own company, but he could have a point there. Now, Elon also said, my guess is we're past peak inflation. I think we'll have a relatively mild recession. I'm just guessing here, maybe a mild recession for 18 months or something. 18-month mild recession sounds like a long run. Now, Elon Musk, as you can imagine, is speaking from a commodity price. If you go look at commodity prices, they have completely collapsed over the last couple of months. That could be temporary. It could be something that lasts into the future. So yes, inflation for Tesla's raw materials probably has peaked, at least in the shorter term, but we're still looking at high energy costs here in the United States and parts of Europe. That probably not going to end inflation anytime soon. Elon Musk on the 4680 battery, he says, I think we'll be in a high volume by the end of this year. This does not affect our vehicle output. We have enough supply from suppliers for 1.5 million vehicles this year. That was the target that Tesla set forth. So it appears that they have suppliers already committed to deliver all the plastics and the metals and all the different little components to deliver these 1.5 million vehicles per year. And it'll really be just up to Tesla and maybe the virus cooperating in China for them to do that. Elon Musk on the Cybertruck pricing. A lot of people saying, well, it's going to be a heck of a lot more expensive. No, duh, folks. A lot has happened and changed since 2019, says Elon Musk. Specs and pricing will be different on that Cybertruck. No more $40,000 truck, believe me. There's no way to have anticipated the inflation we've seen in various issues. I can say it will be one hell of a product. Cybertruck production will be in volume production by mid-2023. What does he mean by volume production? I think for Tesla, it means around 10,000 trucks, maybe sometime by mid-2023. And you better believe I've got one of these on orders, and I'll do whatever it takes to get one of the first ones, even if I got to pay 6 figures for one. Elon and how many factories are needed to make 20 million vehicles. Again, they're on pace to make about 1.5 million cars. So we're looking at over 10 times more. Elon says they'll roughly need a dozen factories. That's about 3 times the amount of factories that they have now. We'll probably end up building 10 to 12 gigafactories with an output of 1 million to 2 million factories. This was later corrected to 1.5 million to 2 million cars per factory over at Tesla. So anytime Tesla builds a factory, you're basically bolting on 1.5 to 2 million cars per year. Elon Musk on the Optimus robot, he says, I think it will turn the notion of what an economy is on the head. We should get news on Tesla's AI bot day. I think that comes sometime later next month. I tell you what, this is an intriguing product. Elon Musk could certainly be overhyping this, but boy, there's a lot of potential for this, especially in an inflationary environment. And then finally, for the retail shareholder out there, breaking news. Tesla shareholders have approved a 3-for-1 stock split. This does nothing for the value of the company, does nothing really for the shares you own. The only people that should celebrate, and the only rational argument is, one, if you don't have access to fractional share investing, I could see that. But also if you trade options, this makes the option premium far smaller when the price of the stock is lower. That is actually a good thing, in my opinion. Now, moving over to the technical segment of the show, we've got the S&P 500. Guys, it's just chilling up here. We're waiting for it to either be able to continue this momentum. I mean, the S&P 500's been on a rocket ship over the past 30 days or more. We'd expect this to give back, but if it doesn't, we'd expect the momentum continue this to go higher. I think potentially to the upside, you could come back into this range up here at about 4,300. That would be really overextended. I think more than likely in the coming weeks, maybe as soon as next week, you come back here and back test this downward trend line, which if it happens in pretty short order, should be south of about 4,000 on the S&P 500. Moving over to Meta, this one is absolutely tradable, and we actually traded this one this week. Those of you who are like, oh, you're so bearish on Meta. Guys, I've probably made more money trading Meta over the last couple of weeks than any other stock that I'm looking at, because it is in such a predictable range, and it moves in this range really quick. It literally comes down here and touches the bottom and then immediately snaps to the top, and we'd expect with Meta probably to retrace and come back to the bottom of this range. And I've simply just been buying at the bottom of this range, immediately setting a trailing stop and immediately making money on this one. You're looking for, on the bull case, really a breakout above, similar to what it did here back at the end of July. You're looking for a breakout above, but boy, this one would really have to get up into kind of the $200 range to really bust us out of this downward trend line. More than likely, you stay range bound unless you get some kind of major acquisition news or something like that coming out of Meta. Now, speaking of breaking out, look at this vertical uptrend over at Apple. Oh my gosh, that is so steep. Back in June, this was 130, and now we're fast forward just a little over 30 days. Now we're all the way up here at 165. This is completely overextended. You would expect this one to break down here, but if it doesn't, I think we have a very strong possibility of retesting the highs up here at about 175 to close to 180, where you'd have to expect some sellers to come in. I tell you what, with Apple, you're looking probably for a back test to this trend line here, somewhere in the 150 range. If you break through that, I think you're buying this anywhere south of 150. It could bottom out, quite frankly, down here at 135, but I think you start buying this one pretty quickly. Now, moving on to Amazon, it is just kind of holding an area that we've identified from a kind of a resistance area. There was an area right in this range in the 140-ish, which is exactly where Amazon is. It's just holding that level. A push higher into 150 would simply just push it into a probably stronger area of resistance on this stock. We'd expect this one to pull back. I think temporarily we could probably pull off that downward trend line. In the shorter term, you absolutely have kind of a parabolic uptrend going on. I think this one shallows out. This stock pulls back. At least in the more immediate term, you should come back and retest these highs back at 125. That's your first opportunity. Pull back further than that, I think you're buying Amazon as they're aggressive in this environment. Now, moving on to Netflix, just holding that upper level. Okay, it broke out of its uptrend, and now it's just riding that uptrend. Boy, this one looks really strong. If it breaks to the downside, I think that could signal some buying opportunities. You get this one south of about 200, 205. That can be a buying opportunity. A push higher, I think, just pushes you into more resistance. That's why I think this one is kind of stalling out in this range. The sellers have been kind of exhausted over at Netflix. The short sellers have made a lot of money. They've moved on to other names, and the buyers, it's really tough for them to push this. This one really needs to get above 240, 245 to really resume this uptrend, and this is really steep. I personally think probably as soon as next week, you'll get either a break confirmation to the upside. I think more than likely, though, with all these stocks, you're probably going to get a break to the downside. That should be your call to make a buying opportunity. Moving on to NVIDIA, we thought that this stock was maybe shallowing out its downtrend, but it didn't confirm that. In fact, it erased that, and it's continuing, like a lot of these stocks, just continuing this monster uptrend. I think we're seeing a very, very healthy bear market rally. You'd have to expect there's some overhead resistance where this stock has stalled out numerous times over the past couple of months, right where the stock is, right about $190 per share. You'd have to expect, again, that it stalls out here. If it does not stall out here, it's probably making a move much higher, up here at about $220 per share. That's the other area of resistance. It probably can slice right through that. If you get pullbacks in NVIDIA, anything south of about 160 on this one, I think can be a buying opportunity, even ahead of earnings. Moving on to Google, this one's just walking up the trend line. Looks very much like Meta, very predictable. If I wanted to trade and have a little bit more margin for safety, maybe instead of doing Meta, which could be maybe a little more volatile based on some kind of announcement that they make, Google's probably not going to have an announcement that's really going to move the stock one way or another. So you could trade this technical chop that we have going on. I think Google has a high probability of coming up maybe a little bit higher into next week, but like a lot of the stocks, they're a little bit overextended. I expect some kind of pullback. You get any pullback south, quite frankly, where it's at, 115 or lower on this one, I think you can buy Google as well. Moving on to Microsoft. Speaking of overextended, you could see, man, the buyers just cannot push this one higher. A lot of consolidation at this price level. If you get a red candle lower, I think you could retest 260 over at Microsoft. That could potentially be a buying opportunity. I think better than that, if you're a little more patient, maybe you get this one south of about 250 if we get some kind of pullback. You get a resumption or bear market rally that we're experiencing. Yeah, this one could come up into the 300s pretty comfortably. It seems a little inconceivable, but I guess at this point, considering this technical pattern was so perfect over such a long period of time, we'd actually expect some deviation, but we'll wait until it materializes to really call that. Now, moving on to Tesla, this one was on a monster run. Back in July, it was down here at about 680 bucks per share, and then boom, it went on a rocket ship all the way up to about 940 earlier this week, gave a fair amount of it back. We do have some levels of support here. Tesla back in February and January of 2021 actually topped out kind of in that $860, $900 range. That's a natural area where this stock could catch a little bit of relief. We thought it was possible, and it still is. Tesla could make a move all the way to the top of our downward channel up here over $1,000 per share and technically still be in a downtrend. We are expecting red candles to show up over at Tesla. And just like Elon Musk says, when red candles show up at Tesla, don't go to Twitter and start crying. Don't start arguing with people in the comment section of Seeking Alpha. Go raise some freaking money and go buy some more shares. This one makes a pullback down to about 750. That's your first buying opportunity. Lower than that, under $700 is another buying opportunity. If we really wash out on this one, I think you could get another shot down here at about 625. Also a buying opportunity. We are buying the dips, and maybe that dip comes next week. We'll see if it materializes anytime soon. We're still months away from earnings from all these companies outside of NVIDIA, so we'll see how the next couple of weeks shake out. But if you get pullbacks, I think the guidance and the revenue numbers and the projections we got from virtually all of these companies make them worthy to buy the dips when and if they materialize. Hopefully, guys, enjoyed today's video. Back in soon with more. Good luck with your investments.